Yeah, that's an interesting story. In the second quarter of 2020, the K-shaped recovery hit. And what I said was, if you're on Main Street, this is the worst year of your life in 30 years. There's nothing worse than this. If you're manufacturing products with people and providing goods and services in the real world. But the K-shaped recovery meant that if you're on Wall Street, you had a 30% gain in your portfolio. And the average S&P index was up 10% a year for 100 years and is up 30% in 1 year. So Wall Street had the best year of their life. Main Street had the worst year of their life. I'm sitting in the middle. I'm saying, I got a massive problem. I'm missing something. We can't keep going where it's like we're rowing 6 miles an hour against a 30-knot wind. This is not going to work. So the first Bitcoin buy that we announced in August, that was defensive. That was, I either have to do this or I get stripped of all my capital. And if I lose my financial capital, my stock's trading not at 120 bucks, it'll be trading at 60 bucks a share. If it's trading at 60 bucks a share, the stock options are underwater, the RSUs are underwater. Microsoft and Amazon and Google and Apple target all my employees. You know, my top line shrinking, my turnover is going to double, right? We're headed toward a death spiral if we give the capital back. If we hold the capital, it's dead money on the balance sheet, losing 20%. So I'm going to lose $100 million in shareholder value and make 50 or 75 million a year. So I'll work for the next decade, but make no progress. I'm just rowing against the wind that's blowing harder than I can row. So I figured better to take a risk than suffer either a fast death. Giving up the capital is kind of a speedy death. Keeping the capital is a slow death. Do something, take a risk is a chance at life. So I figured better to take a risk. It's defensive. And the first purchase in August was 250 million. You know, and I thought, you know, wouldn't it be great if we get $50 a share in Bitcoin? But our first buy was about $25 a share in Bitcoin, about 10 million shares outstanding. And then the Dutch auction, well, I didn't know what would happen. I mean, for all I know, if the shareholders hated Bitcoin, we would have got hit with $250 million of redemptions. And then that's all we would have. But as it turns out, the Dutch auction resulted in $60 million in redemptions and 175 million in free capital. So at that point, you know, we meet as a board and we think, well, we've got extra capital. We've already come halfway. We might as well adopt this as the primary reserve asset. And so we did that. Then we bought 175 million more Bitcoin. It wasn't easy because we bought that first tranche. Bitcoin was trading like 11,600.
Yeah. In
that 20 days, it traded down to 10,000. Okay. So in that first 20 days, I'm getting beat on pretty hard. You know, you moron, you've lost $40 million or something. People kind of make fun of me today on Twitter, like Michael Saylor lost all this money. Or like, it's not my first time, you know. This is, you know, take a ticket, stand in line. This is like not the first time a trade has gone against me. So the actual courageous decision, I think, was the second decision, because the second time around, we were putting $175 million in, and I think that purchase was like 10,400 a coin. It was, yeah. So we were actually doubling down after the market moved 10% against us. But, you know, it is what it is. And so that's stage one, defensive. And what happened next is the stock traded up. And then all of a sudden, the stock traded up to the 10-year high. And so for 10 years, we'd never gotten above $200 a share, and we went into 200s, and we went into the 300s. And at that point, you know, we were generating cash. We bought Bitcoin with some cash. You know, some of the employees were exercising some stock options. We generated cash from stock option issuance. We bought some Bitcoin with that. And you know, the equity markets were pretty strong. The convertible market was strong. And we thought, well, maybe we can actually raise money in a convertible debt offering. And so we came out, we offered a $400 million debt offering. Well, you know, the stock's trading at like 300 or something. We couldn't have raised $400 million at that level at any other time in 10 years. So we thought, we'll offer that. Bitcoin traded up a lot, and our stock was up, and we had an opportunity. So we upsized the deal. We priced it at the low end of the range. We were able to basically make the deal a $650 million deal at 75 basis points, like 0.75% interest. And it was a 37% premium, which is the high end of the range, which meant that in essence, the strike was $398 a share. Now, keep in mind that a few weeks earlier, our stock was trading $90 a share. And when we announced this strategy, our stock was $120 a share. So in essence, we're raising money at not quite 4 times, but almost 4 times that price. And at that point, I call that opportunistic. It's like, why did you raise the $650 million at less than 1% interest? Well, because why wouldn't you? Why wouldn't you? Like, if someone wanted to give you a $650 million loan to invest in anything you wanted to invest it in for less than 1% interest, would you take the money?
Yes.
Yeah. Okay.
Yeah.
So
we're
opportunistic at that point, I think in the offering, they said, well, are you going to buy Bitcoin with it? And I said, yeah, I'm going to buy Bitcoin with it. And so we went back and forth over, well, is it for general corporate purposes or to buy Bitcoin? And we eventually said something like, we're going to buy Bitcoin with it and then hold it for general corporate purposes if we want in the future. So we're at the stage where we're an enterprise software company, and our market cap is up, and we've got this interesting treasury reserve strategy. And it went from a treasury investment to a treasury reserve strategy to an opportunistic capital raise. Then what happened next is by the time we got to February, Bitcoin caught fire. You remember what happened? It went to all-time high. So we bought $650 million of Bitcoin around 19,000 or 20,000. I don't remember exactly, but people said, you're crazy. You're buying at the all-time high. Well, okay, let me just say for the record, guys, I'm going to be buying at the all-time high forever. If the company's in business 30 years, then every year for the next 30 years, there's going to be a point at which I'll be buying at an all-time high, The haters are they're like, blah, 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 you bought some at 57 or 49 or whatever. They always conveniently forget that I also bought 175 million worth of it below 10,000. They leave that part out, right? They always remember the other part. But every year forever, if you just focus upon the last 6 months, you're going to be able to find someone buying something at the all-time high. So we bought this at the all-time high. No, I was like, what was the all-time high to date? I mean, at some point the world changes. I have views of, the future, and the future includes things that have not yet occurred. And the future includes things that didn't happen in the past. And so, right, the all-time high is just the all-time high to date. So we bought, and Bitcoin just kept trading up. We probably bought a bunch at 19,000. You remember it was 25,000 by Christmas. It was 30,000 by New Year's Day, and then it went on this run. That convertible bond that we sold, that was the best performing bond of the year of every bond sold by any company in the world. Okay, the people that bought that bond tripled their money or something. It traded up, it tripled, right? They doubled they got a 200% return in 6 weeks. So it was a screaming home run. So because the strike was 398, our stock ended up going to 1,000. Bitcoin was screaming, you can go do the math, but. So at that point, we had a chance to go back to the market, and we thought, well, maybe we could do it again. Okay, our stock hit $1,000 a share. So we went back, we did a convert, and we started this time at 600 million, and we upsized it to 900 million or something, and we exercised the green shoe, and it was a $1,050 million capital raise. And the range of coupon was 0 to 50 basis points. So we priced it at zero interest. And the range of the premium was 37 to 50 or 37 to 47 or something. And so we were at the high end of the range. So the short story there is, so we raise $1.05 billion with a strike price of $1,432 a share. Now, you remember what my bottom was. It was like $90 a share. You remember what my tender price was. It was $140 a share. In September, people were giving the stock back to us at $140 a share because they thought we were crazy. And we turned around, we sold $1 billion at $1,432 a share. Now, why? Because why wouldn't you? Again, like, why? If someone said, okay, what business are you in? Blah, blah, blah. Well, would you like $1 billion for the next 6 years for free to invest in that business? Well, yeah.